Juan Delgado is a co-CEO of investment management firm Hamilton Lane, which specializes in private markets, and he's joining us live here in Hong Kong. Thank you so much. It's been a while. How are you doing?
Thank you. Good to be here.
Yes, thank you so much for coming in. So you do primaries, secondaries, real estate, VC, growth. And I wonder, across all the business areas and portfolios that you look at, IPO, it's happening. I mean, SpaceX has sort of opened the door in a big way with a bit of a bang there. It is a major distribution event, and I wonder how the capital is going to position next. Some of the capital that would be distributed, where do you see that capital going?
Great. It's good to be here. It's a great question. But I think we need to take a moment. SpaceX is a fantastic private market story, because that's where the value was created. So before we go into where the distribution is going to go, you have to acknowledge that for 20 years, your only access point is being private markets. So value is created in private markets, the funding rounds, the different access points, and that's where 9 out of 10 companies are living. So it's a great reminder that that's where the next companies are going to come from, and that's where the next companies are. So if you want access to public market blockbuster IPOs today, think about your private markets allocations going forward in the future. But I think to your point, to your question, we're coming from a market of low liquidity, as we discussed last time you had me on. And so this is a great relief. And it is going to be reinvested in the private market allocations orderly over the next year, particularly reloading on the AI story and reloading on venture and the access points for this same theme that we're talking about.
Yeah, I would think that the capital would stay on the theme. I mean, really betting on early days of SpaceX, I would imagine that it's a lot of tech billionaires out there, and some of the smaller guys are wanting to stay in that trend. Do you think, though, that the companies staying private longer, is that a trend that's here to stay? And what is the structure behind it? What is the psyche behind that?
Definitely. Definitely is here to stay. You see in the other companies on the pipeline, the two that were mentioned and a few others way behind. And the rationale for that is that if you're a CEO, you actually have access to capital in many different rounds, through many different routes, and across a global set of investors. And so you can really grow your business to phenomenal sizes. Look at the earnings that you're reporting on before companies go public. Gone are the days where you go public too early in, say, 200 million revenue like Microsoft did. So essentially, yes, yes, yes would be to your question.
Yeah, I know Manisha wants to come in on this, but really quickly, SpaceX is a very special case. It's Elon Musk, it's SpaceX. But not a lot of private companies would make that kind of debut into the public market and provide that kind of a liquidity event, that kind of distribution to investors who stuck it out for many, many years. So how do you balance that, especially when we're looking at a lot of private investors out there, private credit and VC funds that sort of bet on the wrong ideas because there were great companies, and then here comes the disruption by artificial intelligence.
You actually see a lot of that already reflected in the current activity. You've seen the repricing of software and other areas where AI seem to be disrupting models and impacting. And where is that happening? It's happening in the private markets again, because those companies are able to reposition that, bring AI into workflows, and get ready to really have better returns. Remember, a company controls the timing into an IPO by and large. But you're again right that the story is about the retail enthusiasm about this play and the retail enthusiasm about all things AI related. And so there's a lot of companies in the private markets that are watching this and then concluding that this has legs, this is likely to continue, and therefore they will be planning the IPOs in China, elsewhere in Asia, as well as in the US.
Manisha, come in on this.
Yeah, sure. Okay, so first of all, very quick question to just extend on that, because you've said it a couple of times now about the timing and how the company chooses the timing. And of course, then the question comes up, so what do you think was the thinking behind the SpaceX timing and the fact that we've still got Anthropic and OpenAI to wait for, part of what we now call the Fab 10, right? So just walk us through what you think the thinking might be behind that.
Well, as you know, again, just back up for a minute, IPO is just about a third max of the liquidity avenues for private companies. So a CEO is making that decision considering where you are on your life cycle, your financing needs, and the scale. What the public markets have proven once and again is one of the largest, most scalable sources of capital for raising. And then I think, obviously, I mentioned that you control timing, but to some extent that needs a lot of preparation, so you don't really control the news cycle. So you have to be really aligning yourself to very long run plays, which again, I think in this case is the industrial revolution type, as we've commented, that AI has brought to our lives. And that's really has started before. You've seen that in India even 2 years ago. It's not entirely new of this quarter. It's been running in private markets for the last 4 or 5 years or so. So that's really why we expect we'll see more IPOs. Regardless of the near-term comments about the revenue lines, we expect more IPOs to come frankly, across the spectrum. But another point, if I may, is not just a blockbuster IPO brings you more IPOs in the sector, is that it just reminds all the other sectors that there is liquidity and there is appetite for private markets fundamental growth.
Yeah, absolutely. I mean, the reason I asked you that about timing is because it really struck me that what a 3-day window in which SpaceX IPO would be debuted, because you had that on one side of the weekend and then you had an Iran-US deal on the other side of the weekend, and look at the impact it's had on markets. But I want to get to some of the notes that you were so kind to provide to us. And you make this really interesting point about not AI being created equal. Why is that important?
Well, we've been saying the market nuance was a little lost. The market was highly volatile, trying to find its feet, trying to find value, and trying to really price in the impact of AI in all of these sectors. And that's really what we mean by that. These sectors where the perception of impact was earlier, as in software, where you're beginning to see companies that are already software AI winners. And you're beginning also to see that discrimination, that nuance. That is just normal markets functioning, and that's what we mean by not everyone is created equal, both in the private side of AI, but also, as you will see, in the public markets.
Okay, so I want to talk just a second about how actually the private markets can offer us this opportunity for potentially more diverse, alternative investments for the bigger investors. But there's always been this concern, like particularly from the retail side, around transparency and access. So how do you address some of those questions?
Well, I think, Manisha, you mentioned it as well with your Fab 10. Look what's going to happen. A campaign scenario where go forward 1 year, lockups are out, retail enthusiasm continues, and now we're again concentrated in 10 companies already public. We will forget that they were once private, and then so much capital is going to be indexed and is going to be following that trade. Where do you look for diversification? You're going to have to go back to the private markets, which is where these companies came from. So I think this underscores some of the themes we've been covering, and they will stay current and valid going forward, because that's where these companies, the majority of these companies are, and that's where you can really be more discriminating in terms of market cap. That's where the mid cap is primarily private, and that's where fundamental growth of suppliers and other companies adjacent to all of these Fab 10 that you just coined.